Alright, so welcome to our recorded tutorial session on tax reconciliation for Papua New Guinea Taxation Unit. Okay, when we talk about book to tax reconciliation, it is an act of reconciling the net income per accounting books and then the income that should be reported to the tax return, which will of course identify items that are allowed or disallowed by the tax office, which is included in the accounting profit. An example of or the format that we can use in doing the book to tax reconciliation, we'll start on the net profit per accounts. This is of course net profit before the tax, and then we have to add expenses not deductible for tax purposes, then assessable income not reported as revenue per tax point of view, and then allowable deductions not included as expenses or as expenses, and then revenue exempt from tax provisions or requirement, and then you will arrive at taxable income. Let's see an example right here. So Mr. Nico, unmarried, a resident taxpayer, operates Vision View Shop. During the taxable year, Vision View Shop has on its financial performance the following. So we have a sale of 600,000 kina, we have purchases of 220,000 kina, opening stock or opening inventory 30,000 kina, closing stock 10,000 kina, administration expenses 110,000 kina, salaries expenses, which includes 50,000 salary for Mr. Nico, the owner, which is 100,000 kina, and depreciation expense 40,000 kina. Now we look into the additional notes. It says IRC allows only 35,000 kina for Vision View Shop's properties, okay, which is for the depreciation. And then Mr. Nico received rental income of 12,000 kina for the year. This is apart from his income on Vision View Shop, where he incurred direct cost of 3,000 kina from that deriving of that rental income. So we are required to calculate the taxable income using the book to tax reconciliation. So when you see this kind of problem, you have to of course first calculate the accounting profit, okay, using the conventional accounting concepts and principles. And then when you arrive at the net profit, we'll start at the book to tax reconciliation. So to calculate the accounting profit, of course, sales less cost of sales, we have gross profit, and then less administration or operating expenses. So we arrived at $110,000. So we'll start from the net profit using the book to tax reconciliation. Okay, so let's talk about book to tax reconciliation. As you can see here, we started off using the amount we arrive or derive from the calculation of accounting profit. Then we have to add expenses not deductible for tax purposes. That will be depreciation per accounting, which is 40,000. As we know in the additional note, it was mentioned that the depreciation as per tax will be 35,000. And then we are adding back salary paid to Nico, because these expenses should not be included as part of the expense, but rather it will be included as an income, as part of the overall income of Nico, because Nico owns the company. So this salary will be treated as income for tax purposes for his income. So eventually the total amount that we will arrive here as a taxable income will be taxable income of Nico. So the salary is not really logical to be included in the expenses here. And then we have rent income. Again, as I mentioned, the taxable income that we will derive here or we will calculate here will be NICO's taxable income. Okay, so that's the reason why we're adding that net income, even though it is not part of the Vision View Shop's income. Now we will deduct those expenses that are not allowed, as deduction, but not included in the expenses. So the depreciation per tax, that will be 35,000. So you can see we removed the 40,000 because that is not the allowed expense, and then we deducted 35,000 here. And then direct cost, and then direct cost incurred in deriving rent income. So we arrive at 38,000 here. We don't have revenue exempt from tax. So we add deduct items, we arrive at taxable income. So this will be the one to be subject using the tax rate. And that's it. Thank you for having time listening to my lecture. Hope you learned something.